our company bought 175,000 Bitcoin this year, which is like 20% of all the Bitcoin we ever bought. We bought it in the middle of a bear market. Every month we're buying 175,000, and it's an extraordinary amount. We sold 32. 32 works out to be 2 basis points. Two 1/100ths of 1%. It's like so de minimis as to be inconsequential, but everybody wants to vent. And, I think the good news there and the opportunity is it gives me a forum, and it gives me the attention of people so I can make constructive points.
Michael Saylor's message here isn't really about handling criticism. It's about understanding what attention actually means. Most people assume success is measured by applause, but Saylor argues the opposite. If people are talking about you, whether they agree or not, it means you've become impossible to ignore. That's exactly what happened with Strategy. Just a few years ago, almost nobody paid attention to the company. Today, MSTR trades billions of dollars a day, with tens of billions in derivatives exposure. That transformation didn't happen because everyone suddenly liked Saylor. It happened because he stayed relentlessly focused on one conviction while the market slowly caught up. The real takeaway is that Bitcoin adoption doesn't begin when everyone believes. It begins when conviction survives criticism. Markets rarely reward consensus. They reward those willing to endure doubt before the crowd changes its mind. As Saylor explains, the mission isn't to chase headlines or win every argument. It's to stay focused on creating long-term value for shareholders, the Bitcoin community, and the broader financial system. With that perspective in mind, let's hear how Michael Saylor closes this conversation in his own words.
Bitcoin's actually going to do okay. There are a lot of good things that are happening. That this is a capital market issue, and hang in there, and we're all going to get through it together, and we'll be better off. And my belief for an individual investor is take the money you don't need for 4 years or longer, buy Bitcoin, leave it there forever, and your grandchildren will thank you. And if you're going to sell something, sell a shorter duration investment. If you need to sell something, keep the thing that's going to last 1,000 years. And that's my practice. I bought a bunch of Bitcoin. I haven't sold a single sat, but that was money that, I didn't need to pay my medical bills and my, and my taxes. If you need money to pay taxes, right, keep it in a different asset, and that's fine. But my advice to a corporation, right, it's like our company is a unique company. We are a treasury company, and what we do is we sell credit. We sold $10.5 billion of STRC. We bought $10 billion of BTC, of Bitcoin with it. And our credit investors expect that we're going to support the credit dividend and pay it, and our asset is BTC. So they expect, if they're like, are you willing to actually, if you make $1 trillion and you owe us some money, will you sell some Bitcoin to pay us the money? They expect me to say yes, because if I'm not going to pay the dividend, they won't buy the credit. The credit rating agency won't rate the credit, right? The equity investors, they bought a company that's stacking Bitcoin. They expect us to say we're going to defend the equity and we're going to run the company responsibly. So if a short seller shorts the stock to a 90% discount to the Bitcoin NAV, they expect us to defend the stock and swap the Bitcoin for the equity so they don't get abused.
Yeah.
And if I'm unwilling to defend the equity, they won't buy it. And if I'm unwilling to defend the dividend, the credit investors won't buy it. It's kind of like, a woman's not going to marry you if you're not going to defend her when attacked by... It's like everybody wants security. And our job as fiduciaries is we need to defend the credit investors and we need to defend the equity investors. And if that means on occasion we'll buy 20 Bitcoin, we'll sell 1 Bitcoin, and then the credit investors will give us enough to buy 20 more Bitcoin, and we'll sell 1 more Bitcoin. That's actually more tax efficient and it's economically rational. That belief in the credit and the equity is how we got the capital to buy 175,000 Bitcoin. If we lose the confidence of the capital markets, we're buying 0 Bitcoin. And so what the company is doing is rational, and it's in the best interest of the credit markets, the equity markets, and also the Bitcoin market, right? Because like, how is Bitcoin better if I don't buy 175,000 Bitcoin? So in fact, I don't think there's a conflict between doing the right thing for Bitcoin, doing the right thing for the equity, and doing the right thing for the credit. I think that those are all in a very comfortable harmony, in a dynamic harmony with each other. That's why our company went from a $600 million enterprise value to an $85 billion enterprise value. It's because the machine worked. If Bitcoin stalls for the next 40 years, like for the rest of your life, then somewhere 30, 35 years from now, we'll run out of money. So we have about 30 to 40 years of dividend coverage. So if Bitcoin stalls, which means goes up 0% a year for 40 years, then sometime in 35 years or something, by the way, if we do nothing, if we do nothing for 35 years and if Bitcoin stalls, then in 35 years, we wouldn't be able to pay the dividend. We wouldn't do nothing, right? We would refinance or adjust. And so practically speaking, probably we have 40 to 50 years if Bitcoin stalls. We have on our web, by the way, we publish that number, the years of dividends, right? And the cash and the Bitcoin coverage. We also calculate Bitcoin break-even ARR. If Bitcoin appreciates about 3% a year, and this number is updated every 15 seconds on the website, if it appreciates 3% a year, we can pay the dividends forever without selling a single share of common stock. So the machine finances itself forever, indefinitely at 3%. It finances itself for the rest of your life, or about 35 or 40 years, at 0%. If Bitcoin appreciates at our stochastic cost of capital, like our probabilistic cost of capital over the next 20 or 30 years, call that somewhere between 8 and 10%, then the equity outperforms Bitcoin, right? So the equity is actually a screaming home run. What if Bitcoin is 10 and our equity will probably be 15 or something? And if Bitcoin goes to 15% ARR, our equity would be 20, 25 because we're amplified. And so the real numbers to keep in mind are 0 versus 3 versus, 9. And so a lot of times people think, they just have these missed numbers like, well, you need Bitcoin to go up 30%. No, I expect it to go up 30%.
Based on history, yeah.
I need it to go up 3%, sort of. But even then, the company has incredible optionality and operational flexibility. There's a lot of things we can do. We can do all sorts of refinancings, and we can create other products, and we can modify products, and we can adjust. So as a practical matter, most people, their attention span is 12 months.
Or
right?
less.
Yeah. So in this particular case, there aren't many people in the Bitcoin community that think that Bitcoin will languish for 40 years. And the truth is, what we would say, and this is not controversial. If you're an equity investor and you think that Bitcoin is not going to outperform the S&P index, you probably shouldn't buy our equity. I mean, our equity investors, they think Bitcoin is as good as the S&P index or better. Most of them are Bitcoin maxis. They think Bitcoin's going up 20 to 30% a year, and they want to. I think our equity has been 48% a year for the past 6 years. So we're performing about 50% a year, and Bitcoin is up 33% a year. So the equity investors normally are maximalist, and they believe in the asset. And from them, they're just doing this because they want to get 50% a year, right? The credit investors, if you think that Bitcoin is an illegitimate asset and it's going to go to 0 tomorrow, or if you think it's going to fall 10% a year every year forever, you don't want to buy the credit. That's like investing in New York City real estate, thinking that New York's going to sink 10 feet a year. It's like, would you buy New York if New York was sinking 10 feet a year into the Atlantic? Of course you wouldn't. And so the credit investors know that the foundation of the credit is Bitcoin. And you kind of have to believe that Bitcoin's either going to go sideways. By the way, the CPI is 3.5%, 4%. So if Bitcoin appreciates at the CPI, we pay the dividends forever. So credit investors, their view is Bitcoin is a legitimate asset, not going away tomorrow. Equity investors is Bitcoin's a great asset, or I want amplified Bitcoin exposure because I think it's as good as the S&P. If you didn't think it was as good as the S&P index, you wouldn't buy it at all, right? If you're an equity investor, you just buy the SPY.
Yeah.
So those investors, they're getting what they expect. People that are short Bitcoin, that hate Bitcoin, well, they get to buy our put options, right? They actually trade in the derivatives market and they can short the common. And so we're actually a gateway for derivatives traders and other hedge funds to take a negative thesis, and that's okay. That we have the largest open interest of any Bitcoin-related company in the world. We have the largest liquidity of any Bitcoin-related security in the world. And we have to thank the short sellers, the traders, as well as the long investors for providing that liquidity. And the liquidity matters. So I think we made our peace with that. And our view is we just need to be true to ourselves. We need to be consistent and transparent. I tell you what we're going to do. We publish it every week. Most companies publish quarterly results. Like, we don't have to tell you we sold 32 Bitcoin. We could actually, 32 Bitcoin is immaterial. Like, it's literally immaterial. We could just not publish the 8K. And it wouldn't be a problem from an accounting point of view or an SEC disclosure point of view. We could also publish results once a quarter. And it would be a very different world if we were doing that. But our view is we want to update the capital structure every week. We publish all these stats to our website, and then the website updates the numbers every 15 seconds. And so we are literally the most transparent, most real-time company you're going to find. And if you like to trade, you could buy and sell the stock or buy and sell the credit multiple times in one day based upon our website, because the fundamentals change. And that's never going to happen with Disney Corporation or with the hotel chain.
Bitcoin didn't just change Strategy's balance sheet, it completely rewrote the company's future. Before Bitcoin, Strategy spent nearly $40 million every year chasing attention through marketing and PR. Yet almost nobody noticed. Earnings calls were nearly empty, and the stock barely traded. Today, the company commands billions in daily trading volume and tens of billions in market activity. That transformation wasn't driven by advertising. It was driven by conviction. In Saylor's view, Bitcoin didn't simply make Strategy bigger. It made the company impossible to ignore. And that's where his story becomes even more remarkable. Listen to how Michael Saylor explains it in his own words.
We used to pay $40 million a year for marketing, and millions a year to PR agencies to get an interview. And we failed. We couldn't get an interview. No one would write a story. We had conference calls where there would be 20 people on the earnings call, and 19 of them worked for me. And one was a retiree with 10 shares of stock. And then, the stock trades about $2.5 billion a day right now, MSTR. You know what it traded in 2020? $2 million a day. And
literally a fraction.
We have $40 billion of open interest in the derivatives market right now. We had 1 million. Okay, so no one knows who you are. You get, I get a tweet and I get 1 like, 18 views. Okay. So the point is, there are worse things than people having an opinion about you. And the most important thing is be cheerful, be constructive, stay on message, don't get distracted. Make sure that you're driving the best outcome for the world, for your own shareholders, for the crypto community, for the Bitcoin community, and that's our philosophy.
Michael Saylor's message goes far beyond Bitcoin's price. He's pointing to a future where individuals, families, businesses, and even sovereign nations rethink how they protect and grow their wealth. Whether you agree with him or not, one thing is becoming harder to ignore. Bitcoin is changing the global financial conversation. The real question is whether you'll recognize that shift before everyone else does. If you enjoyed this video, don't forget to like, comment, and subscribe for more Bitcoin and crypto insights that help you stay ahead of the market. Thanks for watching.